US dollar gives up a little bit of performance in mixed trading. And before we start, a quick word from our sponsor. This video is brought to you by XNS, the world's leading retail brokerage firm offering ultra-fast execution and no overnight fees. Look for a link in the description below. The euro has gapped lower, but then rallied after that to continue to see a lot of noisy behavior. That being said, the market, of course, is still very much negative, and we have sold off in the later part of the European session just a touch. So this suggests that we will continue to see downward pressure. That being said, I think it's also worth noting that the market is likely to continue to see a lot of questions about tariffs coming out of the United States. And of course, the fact that the European Union is very sluggish. And of course, the U.S. economy continues to chug right along, with the Federal Reserve likely to remain very tight with its monetary policy. I still favor shorting rallies. The U.S. dollar has rallied a bit against the Japanese yen as we continue to see quite a bit of noisy behavior out of this market, but we are starting to sell off at the top of the range from Friday. So it'll be interesting to see if we can actually get anywhere. This is a market that I think eventually shows a certain amount of value here. But it's also worth noting that we are right at the 200-day EMA. And if we can't get above there, that could, at least in theory, be a pretty negative sign, perhaps sending this pair down to 150 yen. If we can break out to the upside and clear the 153 yen level, then the 50-day EMA is likely to be targeted. The Australian dollar has gapped lower to kick off the trading session, but since then we've seen the dollar sell off quite a bit to fill that gap. The question is, what do we do with the 50-day EMA sitting right around the 0.63 level? This is an area I'm interested in fading at the first signs of exhaustion, so I am watching it very closely. If we can break above there, the 0.6350 level gets targeted. And anything above there then could change the overall trajectory of the market, at least for the next several weeks. When we do break down, the 0.62 level underneath, I believe, is significant support. My name's Christopher Lewis. I work for FXEmpire. If you enjoyed the video, give me a thumbs up and subscribe to the channel for more analysis.